Assalamu alaikum everyone. How are you? I hope everyone is doing well. So I discuss the I discuss about an overview on the last monetary policy that means July 2024 to December 2024 declared by Bangladesh banks. First of all, provide a summary of the monetary policy. So what is monetary policy? So the monetary policy refers to the actions and strategy implemented by a country's central bank or monetary authority to regulate the money supply, control inflation, establish the currency, and promote economic growth. So first of all, interest rate adjustment. In October, I see that in October 2024, Bangladesh Bank raised its key policy interest rate by 0.5% points to 10%. This was the fourth interest rate increases in 2024, aimed at tackling inflation. So, secondly, inflation. Food inflation reached around 14% in November 2024. General inflation stood at 11% in November 2024. By December 2024, inflation had climbed to 11.38%. And thirdly, exchange rate and foreign reserves. The USD exchange rate was capped at Taka 120, although state-owned banks offered slightly higher rates, reaching Taka 122 in August to September. A 58% increase in remittance was recorded during August-September, totaling $4.6 billion. So finally, monetary policy tools. The reserve requirement for banks was adjusted to control liquidity, though exact changes are not specified. The currency exchange band in the interbank market was expanded from 1% to 2.5% in August 2024, allowing more flexibility for banks to offer exchange rates. And second method is mentioned significant change compared to the last policy. Here is a summary of the significant changes in Bangladesh Bank monetary policy during July 2024 to December 2024 compared to the previous policy period, January to June 24. First of all, repo rate. Repo rate, policy rate 9.5% and before 9.5% and after October 2024, 10%. So the 0.5% point increase tightening to fight inflation 1.38% by December. Secondly, reverse repo rate. Bank deposit rate at Bangladesh Bank 9%. 9% before and after 9.5% adjusted in the line with repo and help absorb excess banking liquidity. And thirdly, cash reserve ratio. The, that deposit banks must hold 4.5% and 4.5%. No change in July 2024 to December 2024. Maintain liquidity stability and banking sector. And finally, statutory liquidity ratio SLR. Bank reserve in liquid assets 30% before and after 30%. No change in the economy. Ensured credit discipline and systematic safety. And third method is what are the tools used by Bangladesh Bank? Here is a more detailed rate and percentage based summary of the monetary policy tools used by Bangladesh Bank during July 2024 to December 2024, including their application rates and economic impact. First of all, policy interest rate. So first of all, what is the policy interest rate? The policy interest rate is the rate at which Bangladesh Bank lends to commercial banks, and this action taken increase to control inflation, and this rate changed before 9.5% as of June 2024, and after 10%. This difference 0.5%, and impact aimed at reducing inflation by discouraging borrowing and showing money supply growth. And secondly, reverse repo rate. That means reverse repo rate. What is it? The rate at which banks deposit their surplus funds with Bangladesh Bank. This action taken adjusted proportionally with the repo rate, and estimated rate that means percent is 9.5%, and typically 0.5 below repo. And impact helps absorb excess liquidity from the banking system. And thirdly, cash reserve ratio, that CRR, that means the cash reserve ratio, that means the minimum percentage of total deposit bank must hold as cash with Bangladesh Bank. And this action taken no change reported. Rate 4.5% after and before 4.5%. Impact ensured stability, liquidity, not tightened suggestion. Bangladesh Bank focused on the interest rate over reserve requirements. And finally, final method suggests the policy reforms needed from your understanding. Here is a clear detailed overview of suggested policy reforms for Bangladesh Bank based on economic developments and challenges faced during July to December 2024. First of all, anti-inflation interest rate strategy. That's anti-inflation interest rate strategy, that repo rate 10% and gradual hikes inflation persist, targeting 10.5% inflation greater than 11.5%. So avoid sharp hikes, allow inflation to fall gradually without stalling growth. So secondly, bank supervision and governance. Bangladesh Bank weak oversight, default rate rising, strengthen supervision, digital tracking of NPLs, target reduce NPL ratio below 8%. That prevent liquidity stress and moral hazard. Enforce striker loan classification. And thirdly, cash reserve ratio, CRR. Use static at 4.5%, flexible adjust CRR to manage liquidity. Target 5.5% if excess liquidity rises. A liquidity buffer for crisis moments, especially during election related spending. And finally, digital fixed monitoring. That means informal remittance channel is still active. Introduce real-time fixed dashboard for banks, and this digital fixed monitoring target reduce informal market premium to less than 2%, ensure transparency and consistency in dollar rates. And fifthly, exchange rate flexibility, band within to 2.5% plus minus. So full plot with a soft monitoring, let mm, Taka or USD dollar adjust to market within 5% buffer, promote competitiveness and reduce reserve burn. And finally, foreign reserve management. So reserve management, despite remittance growth, issues fixed bonds to expect limit import LC for luxury goods, and foreign reserve management target maintain minimum reserve of $25 billion and diversify fixed source and curb non-essential outflows. So thanks everyone, and thanks everyone and watching this video.